Okay, good. So today we'll be talking about the future of money and central bank digital currencies in specific. First off, I would like to ask how many people know what CBDC is, by a show of hands. Okay, oh, that's good. Okay, so unfortunately my lecture is 30 minutes, so I'll barely be scratching the surface. Apologies for any brevities or overlooking at any of the details. So we already heard who I am. My academic experience is in psychology. My work experience is in tech. I've had startup and corporate experience with project management in IT. I've managed projects in e-commerce, trading, and DOT now. I have a product mindset. I'm interested in solutions that use constructive innovation in the real world. And actually my third language is Chinese, not German. Who is INDUSTRIA Technology? So we have been on the market for 18 plus years. We've had hundreds of projects delivered in a variety of industries, but one of the industries that has been with us from the beginning, and we still focus mainly on that, is finance. So when we started, financial innovation meant having a digital presence, a website, and that was pretty shocking. And then a couple of fintech revolutions later, now we use better tech. We use enterprise blockchain, confidential computing, process automation, and a lot of other skills that we use. So I think it's very interesting that our company oversaw the history of finance kind of evolve through our projects. And currently we work with CBDC, the topic of our discussion today. Okay, we're going back. Okay, the future of money. So what is money? Money is a system of value that facilitates the exchange of goods in an economy, right? But when we think about money, we think about cash. And money has not always been cash. It was a lot of different things throughout the history. It was bartering at first for lumber. It was physical objects, stamped coins of bronze and copper. Gold and silver were introduced to pay armies. And then international trade became a thing, so people couldn't bring heavy bags of coins with them. And paper money was introduced because it was lightweight. Then the gold was introduced, the Gold Standard Act, first in England, Portugal, other European countries, and then the States. However, gold became devalued, and due to depression as well, the gold was dropped. And then in the 20s, there was an industrial boom, and the consumer layer was growing, and people were eager to spend, so credit cards were introduced. And credit cards and credit in general has been used to generate value ever since. Then in 1982, there was a paper from the Bank of England about electronic money, and it's one of the first official steps towards what we're going to talk about today. It took around 15 years to catch up on, and in 1995, electronic money was introduced in the European community. Now, this isn't really the definitive date, but it's a symbolic one. And then, 2009, we have the introduction of Bitcoin. And Bitcoin's introduction was not just a revolution of tech. We've already had the tech for some time. I assume Bitcoin, everyone knows what Bitcoin is? Okay. So it's based on cryptography, right? We've had cryptography. Bitcoin is more a revolution of freedom and a revolution of the people, a revolution of ownership and freedom to act as you will with your own assets, right? I think it was a major breakthrough, if not one of the biggest fintech revolutions that we've had. And with the creation of Bitcoin, a whole new world of digital currencies appeared. So these are the three main types of digital currencies that we have out there. We have cryptocurrencies, such as Bitcoin, Litecoin, Dogecoin, and so on. There are over 20,000 cryptocurrencies, and as of today, the total market cap is 1 trillion, I think, or a little bit under 1 trillion. When I did it in December, it was 2.4, so I had to check today just to be able to be sure. Earlier this week, it was 1.4. So cryptocurrencies, they're very volatile, right? This doesn't go to say that cryptocurrencies aren't nice or necessarily that they're riskier, but their price is volatile and fluctuating. So obviously we can't use them on a corporate level or on a government level, at least at large scale. Stablecoins were introduced as kind of a compromise. So stablecoins are pegged either to a fiat currency or cryptocurrency or any other asset, or limited in some way. However, they have their minuses. They are subject to a lot of external audit. They are dependent on third parties and so on. And central banks, the main institution that gives money to people for a long, long time, suddenly fell out the loop. There was digital payments, there was all kinds of mobile payment providers, but the central bank had been left out. So we have central bank digital currency, the third type of digital currencies out there. Now CBDC, I want to say that it's not an out-of-the-box solution. It's not a one-size-fits-all solution. It depends on the government. It depends on the policies and regulation in a certain country. So when we discuss CBDC now, we'll be discussing general possibilities. And before we get into what CBDC is, I want to talk a little bit about the type of central bank money that we have. So we have two main types. We have the reserve money, which is also called M0. That is the money that the central bank gives to other financial institutions and banks. Then we have cash, which is, the first one is also called wholesale. Cash is the money that we use in the retail sector. So cash is the only form of central bank money that end users actually use. And I don't know about you, but I don't really use cash. With digital payments, my phone, I don't even use my plastic cards. So many of us have actually stopped using central bank money. And what that means is that our money is actually tied up in private payment providers. And the issue with that is that they are not reliable, we don't have security, and our money is distributed amongst many platforms. One of the issues. So central banks had to catch up on. We can see this in Asia, where digital payments started a decade ago, at least, being extremely popular. People, I think under 3% use actual cash nowadays. And the central bank had to do something so it can catch up on it. So CBDC was introduced. And CBDC is not necessarily a payment. It's an instrument because of all the possibilities that the CBDC has, that the central bank provides in terms of implementing fast monetary policies and so on. So, types of CBDC. There are many ways in which you can look at the different types of CBDC. But it's important to know the architecture, right? You have the central bank as a first layer, you have the retail and commercial banks as a second layer, mobile payment providers and so on, private providers, and users. So it's the two-tier model. And a CBDC can also be implemented in a one-tier or two-tier model, meaning that in the one-tier model, the retail and commercial banks are out. And in terms of issuance, which is the most important part of the CBDC, we have three main types, and this is what you will usually be seeing when you read about CBDC. Now, most of the banks are already researching, and they're in research and development phase. So you'll see a lot of papers, a lot of news written, and it's important to know that the terminology is being cleared up at the moment. So we have direct CBDC. This is when the central bank owns the issuance and the distribution to end users. This is more appropriate for smaller, still developing countries where the financial landscape isn't that robust and complex yet. It also promotes financial inclusivity and speed. Indirect CBDC is when the retail bank reissues the central bank money and handles the instrument independently from the central bank. Now this, kind of like our current banking system, so the issue here is, the main issue is that should the retail bank fall into distress or go bankrupt, our money is not safe and we are not backed up. And in Bulgaria, we do know of a case such as that. And then we have the hybrid CBDC, which is the model that most central banks are currently researching. Now they are doing that because a CBDC is a major fundamental change to government, and it cannot happen only on a public level. The private sectors are growing, and central banks need the private sector so that they can find the appropriate solution. So hybrid CBDC is the central bank remains the owner of the ledger and the issuer. However, the financial institutions, retail banks, commercial banks, and so on, they're responsible for the distribution of that money. And what this does is, first, it removes the overhead from the direct CBDC, where the central bank does everything. So that also includes KYC, AML procedures, and so on. Here it's distributed, no overhead, and should the retail, commercial bank, financial institution fall into any distress, the central bank can just simply remove that retail bank and continue operation. And your money keeps on being safe. So, CBDC futures. As I said, it's not an out-of-the-box solution, so it's very hard to say CBDC always has this, this, and that. However, there are features that we currently see in the already released or piloted CBDCs. We have the reliability. Now, of course, this depends all on the solution, but the reliability is one of the things that are constant about a CBDC. So your money is on the central bank ledger. The central bank issues that money, and you have reliability that you can take full ownership of that CBDC and you can transfer it easily and fast, which is not the case with retail banks, where let's say you want to take a boatload of cash out of the bank and do something with it. You need to go to the bank and give a reason why you're doing that and have that approved. Otherwise, bank runs wouldn't be happening very often. You have financial inclusion, and that is a very important advantage in my mind, because there are 1.7 billion, I believe, unbanked people or underbanked people in the world. That means they don't have access to a financial institution, financial services, or even a mobile banking provider, like the private ones. This is very worrying, and this is due to cost, lack of infrastructure, and so on. So with CBDC, you can actually have it. You just need a mobile phone number, which most of the people do have. And also financial inclusion, because when we see with COVID and we see with the war, stimulus checks are very hard to get through to the audience, to the people, not the audience, the general public. Financial aid is very hard. It's a very hefty administrative and financial process. It takes a lot of time, so CBDC would help with that. And then we have cost and speed. Personally, for me as an end user, these are the two biggest advantages of CBDC, and that is because cost, because depending on the solution of CBDC, you can actually cut out most of the intermediaries. Why that is good? Because you would eliminate almost all transaction costs. Now, of course, this depends on the CBDC in question, but we see that with the Caribbean, actually, 8 countries there have CBDC implemented, and their transactions are none between users. So that is a major plus. Also, there is the cutting of costs of cash production, which I was very surprised to find out that in the UK it's 5 billion a year industry. And personally, I think there is a much better way that you can spend that money for the general public. Then we have cost of financial infrastructure. The physical infrastructure where banks are. In remote areas, I'm sure you have been to smaller towns or villages where there isn't any banks or any places where you can actually conduct your financial services, and nowadays you can't do anything from your phone. If you apply for a loan or you need to go through some administrative paper, they say, oh, the mobile app says you can do it, but you actually have to come to the bank, right? So people go to the city to do that. And that would no longer be the case. Speed, because should a CBDC be token-based, that would mean that your transaction would be immediate and final. And much like the benefits of public blockchain, we all need speed. We all want to be able to transfer our money immediately and with finality. We don't want to wait for settlement. We don't want to wait 2 to 5 business days, so that with a huge percentage of our transaction as a cost, we send money cross-border. So all of this can be eliminated if a CBDC was implemented. Not to mention that cross-country platforms for CBDC, the rails such as SWIFT, for example, could be improved in a way that it's actually cheap, because currently it's a very costly procedure. Okay, this is a quote by John Kiff. He worked 25 years in the Bank of Canada, I believe. Then he worked at IMF. Currently, he has a think tank, and he works like a CBDC expert. I very much encourage reading his articles. So he talks about offline CBDCs and the fact that the truth lies in the technological past. And why he says that is a very interesting fact that the first CBDC was made in the 90s in Finland. It was called Avant Card, and you could use it and pay offline with merchants. However, the merchants didn't have POS devices, so they eventually gave up on it in 2006. The UK followed Avant and made Mondex cards. If you remember, they are no longer active for similar reasons. However, the technology was there, and people were excited to use something like this. And we could implement it today. So I was thinking here to talk about the use cases, but there are so many that I was more eager to talk about the risks, because when I mention CBDC to people who know what CBDC is, it's usually, oh, where freedom dies, right? So nobody wants to hear about CBDC. They think this is an infringement of your privacy, and I'm always very surprised by this, because you already have your money in many payment providers, private, foreign. I highly doubt most people actually read what kind of data is gathered. And I believe most of the people here use a credit card. So credit card companies monitor each step you take. They monitor how much you spend, where you spend, how you spend it. And they make patterns and reports and analytics, and we willingly give that out so that we can be in credit to the bank. But I'm always surprised that people say that. And the two topics that people bring up is security and privacy, right? So of course this depends on the solution. You cannot say that, in general, a CBDC is always safe, and you always have the maximum amount of privacy, right? But we can look at already implemented solutions of CBDC and see what steps they took to make this secure. And even the Fed Reserve, they were very, very conservative about a possible CBDC. They've released a very big report on the security implications and how they're gonna actually address them. So again, depends on the solution in question, but security should not be an immediate no. Privacy. Now, privacy is probably the reason that people dislike the most. As I said, credit card companies, they take your information either way. Most payment providers do. For example, I use Revolut. I love the app. I love that it has a little analytics module, but I know that this is because they monitor each spending that I do. So this can either be not a bug, but a feature. It can be something nice for people to have that analytics in their app, mobile app. But basically, the CBDC can either keep the same level of privacy, lower it, or make it higher, depending on the government's regulations, for example, with GDPR. Now, the two other risks are something that I generally believe people don't care and don't feel any sympathy for banks or governments, but this is a real risk, bank runs and currency runs. So a bank run is quite possible with a CBDC because you would be able to take out your cash immediately and move it immediately. And there's nobody to stop you from that, right, by general solution. So this is a very possible risk that you can bankrupt a bank. You could remove all of the funds of a certain bank should there be an economic crisis or something. In the past, people would line up in the bank and wait, and maybe after 4 hours they would give up, right? But nowadays, you can do it with a CBDC immediately. So this is a very real possibility, and what CBDC central banks are doing is putting a limit on how much you can take. Currency runs are something else. If you're in a developing country and let's say your country started a war and your current country's currency is going down in value, you want to put your funds somewhere else, right? So with CBDC, that would be pretty easy. And if that happens, you could ruin a country's currency and make the situation even worse. So this is something that would also require some kind of limitations. This is a quote by Richard Tern. He's one of my favorite authors, and actually it's because of his book Cashless that I got interested in CBDC. It's a very hefty book, but very interesting. He basically says, look at the CBDC in question before you actually judge it. And I was very surprised that a person who supports CBDC can write such an objective book where he addresses a lot of the risks and implications of a CBDC very objectively, but also looking at the advantages. And he uses China's digital currency to look at those advantages and disadvantages in practice. So very interesting book. And now I would like to look at the CBDCs around the world, because I believe almost 100% of all central banks are already researching CBDC in one way or another. Some banks are doing it because it's good PR. Some banks are doing it because they know that they need to start their research process early on. And others have already launched. Interestingly, or maybe not so surprisingly, there's 10 CBDCs launched. 8 of them are in the Bahamas. One is in Nigeria, it's called the e-Naira, and one is in Cambodia, it's called the Bakong. And out of all of them, the Bakong in Cambodia is the one that is direct, because the economy is small, and uses blockchain, which is very interesting. And I can go on about this for a long time, but I'll leave it up to you to research this. It's fascinating. They're also stabilizing their currency with CBDC, and this has been already proven because it's been launched for, I believe, 2 years now. So yeah, it's interesting because the smaller countries have less regulation, less policies, and it's very much easier to implement the CBDC. While countries like China, for example, they've been in research mode since 2014, and just this year, they have released a pilot version. They're doing it in stages, and they're testing, and even though they have billions of yuan already in process through digital currency, and I believe over 200 million independent individual users, they're still in pilot version because you don't want to mess up with CBDC in production. So yeah, that's about it, more or less scratching the surface. Any questions? Everything is. Okay. I'll take it, no questions. Thank you very much. Oh, sorry. Okay.
Hi.
Hi.
I was wondering, what is your opinion on blockchain CBDCs versus non-blockchain CBDCs? Is blockchain an essential component of a successful CBDCs, whatever that is, or not? Do we actually need blockchain for CBDCs?
Okay, that's a good question. It's a long answer, but in short, I believe blockchain can help CBDC a lot. And as I specifically mentioned Cambodia's example, because you can see the benefits of blockchain there. What I do think is that blockchain, depending on the blockchain in question, could be very computationally heavy. And for a bigger economy, such as China's, for example, blockchain is not a solution for issuance and the bigger part of distribution. But what they have done is they have let the private sector implement blockchain into the retail part of the whole banking system. So the wholesale remains centralized, no blockchain included. But in the private one, in the retail one, they do want to use it. Hope that answers more or less. Okay, anyone else a question or? Okay, thank you very much. It was a pleasure.